I am pleased to welcome you on behalf of Georgian Association of Microfinance Organizations. I'm Peso Shingelia, the chairman. And we have in panel Mr. Murtas Kikoria, the Vice President of National Bank, and Archil Bakuradze, our board member. And hereby I want to thank Archil for this greatest initiative. It is completely his organizing this meeting today. Regulations, as you know, during the last year we have been experiencing the chain of regulations, and we are on a daily basis in contact with our international partners and updating with the information, but we decided it would be very useful to bring us all together, the main stakeholders and players on the market and the regulators, and to discuss all these changes which are in place already and all these forthcoming initiatives which will be in place for next year. So it is also a very good opportunity to move later on some interactive session and ask the questions to Mr. Kikoria. But before, Archil will give some insights and main outlines of these regulations which are already in place. Thank you, Archil.
Thank you very much, Vice Governor. Thank you for being with us. Dear colleagues, we have a very impressive list of investors who are based in Tbilisi. But before, I'll probably mention that we have a great presence of people from Ministry of Finance, parliamentary committees, Budget and Finance Committee, and Economic Policy and Sectors Committee. We have investors, financial institutions, as well as members and stakeholders of a Microfinance Association. So welcome. Thank you for being with us. Thank you for being interested. Also, let me greet people who are online. I hope you hear us well, and you'll have a chance to ask questions later. We have wonderful group from mainly Europe and US. We had confirmations, and I think we're joined by people from our investors and rating agencies or development finance institutions, Frankfurt, Warsaw, Brussels, Geneva, New York, Chicago, and Washington, D.C. So quite a sort of impressive list of people following us. So again, thank you very much, and hi to Asia, Europe, and North America. So now let me start my brief presentation on behalf of Microfinance Association. First of all, let me thank all of our members who brought this together. And I would like to again look at the agenda. After my brief discussion, my brief presentation, we'll have Vice Governor giving us his comments and his thoughts, and then we'll have a half an hour Q&A session. So we encourage both people here and online through chat function to ask their question, and we'll try to answer as much as we can. So we think to wrap up in an hour, more or less. So let me start with a brief update about Georgia. I think everybody knows that Georgia is in a good shape. Our real GDP growth was 5.3% Q1. End of May, we had a wonderful 7.5% year-on-year basis, which shows very good trend. We also have inflation rate intact, has stabilized from last year. We have now even below the target. And you can also look at the monetary policy rates. And it is in the regional context, I think Georgia really looks very stable. National Bank keeps monetary policy rate unchanged, presumably for many reasons, including from protecting us from inflation from neighbors. And You can see also extent of the weakening of Georgian lari since 2014. We have been hit by a devaluation wave, but it was not so dramatic as some of our neighbors. And even if it was roughly 30%, our financial industry, showed quite a good degree of resilience, and assets quality was quite good. So changes in microfinance regulation has been coming, and we would say there are two headlines. One is inclusive economic growth, something which Georgian government is now very keen on, and which exactly coincides with the vision and function of the microfinance industry, because we serve that part of society which is meant under inclusive economic growth. Obviously there was a lot of reference to fair rules of the game for the entire financial sector. It's a new policy. However, it was not new for NBG, because National Bank of Georgia has already, for more than 2 years, started very sort of orderly transition from quite a unregulated to very, still I think lightly, but orderly regulated sector. We had a number of legislative or regulatory changes since 2016. So pace of reforms accelerates, no doubt about it. But first it started at the end of 2016 with NBG decree on consumer protection, and then there were changes in civil code, framework for penalties have been defined, then changes in loan MFOs, which among other things increased the maximum loan amount. Then we had sort of series of NBG decrees, such as rules of record keeping and reporting rules, MFO registration, MFO winding up rules. And recently we had a very important pieces of regulation on oversight rules, which includes ratios, and also loan loss provision rules. We shall speak about them maybe later in a greater detail. Forthcoming two pieces. One is a bylaws on crediting of natural persons and affordability rules, which is something we are working at the moment. And there will be changes in the civil code, which will bring mandatory licensing and 50%, most likely a 50% interest rate cap, although we have a recommendation about that as well. So, broader regulatory framework, I will explain in a very brief manner. If you look at this microfinance regulation and what it means in a broader way, it's essentially about consumer protection. Financial literacy is a sort of initiative launched by President of the National Bank and supported by government. Personal data protection, financial stability, obviously, and oversight, anti-money laundering and countering terrorist financing, and other broader pieces of regulation. I'll explain maybe in a greater detail each of them, so everybody understands what is the sort of whole framework is. So consumer protection includes efforts such as de-dollarization, a very important piece of regulation, which I would say has been very successful. Might be difficult for some players, but with the help of the National Bank of Georgia, I think we have passed this pretty well. Big initiative on transparency of prices, of fees, and the way how customers are generally treated. That was also a strong set of rules. Interest rate cap, 100%, and also some other limitations of financial costs have been introduced already more than a year ago, and I think they brought already a necessary sort of positive impact. And forthcoming measures on over-indebtedness. So that, I think, closes the branch of consumer protection. I'll now go to financial stability. It mainly includes two pieces. One is the financial oversight, essentially about ratios. We shall look at the ratios in greater detail if needed. And also loan loss provision or classification of assets. That's also a new rule which has been adopted last week, essentially. To finish with tax, and corporate reporting. So I will say a couple of words about corporate reporting and then come back on tax. So Georgia has become a part of European Association Agreement. Country assumed a number of responsibilities, including on improving the corporate reporting and disclosure. So MFIs have been essentially defined as a public interest entities, so the highest corporate reporting standard, and that's something which we embraced, of course, and carrying on our reporting as needed. But again, this just to show you how much has happened in a recent, couple of years. And obviously tax. There has been a big discussion on Estonian model, which essentially relieved corporations from profit tax, except those taxes which go into dividends. Somehow MFIs and our friendly sector, commercial banking sector, have been put aside from this. So we didn't get the benefit of Estonian model, which is fair enough, probably. But there is now a very interesting legislation tax regime for small businesses. And that's something which really offers a huge opportunity to our clients who are micro entrepreneurs and who are ready to graduate to the next level. And I think this is something which is worth of the attention. So that's quid pro quo. I mean, there are some regulations, there are some demands. However, we are offered some good things as well in parallel of it. So I'll explain what they are, and Vice Governor will probably outline them in a better way. So first of all, good things is a restriction for non-licensed market participants. So essentially from New Year, we'll have practically no unlicensed actors on the market, which is a huge positive thing. We would like to see more access on JUL instruments and for foreign exchange hedging instruments. I mean, this is a difficult issue, but it's been mentioned. That's why we think it's a great incentive for the sector. Deduction of loan loss provision expenses for tax purposes. That's a big thing which comes hopefully from the Ministry of Finance, and that allows us to save some profit tax. Access to online public services, subject to obviously customer consent. So we speak here about databases which government maintains and which could be used for improved services or automated decision making for our customers. A very positive development was that Ministry of Finance offered us to undertake company or tax residency registration, and this essentially branches of MFOs will be able to offer clients the instant registration or instant application for the company or for a tax residency. And this is vis-a-vis the, I would say, revolutionary tax regime for micro and small enterprises. Maybe to give you a bit of idea to investors, we speak about enterprises which have a turnover less than 500,000 lari, 500,000 lari. Those enterprises will be essentially paying 1% turnover tax. And this is extremely favorable tax regime for micro and SME, micro and small enterprises. Part of the package is a better regulated credit reference agency. I would like to use this opportunity just on behalf of my colleagues to thank once again Crediting for Georgia for a wonderful job they're doing over the years, because I think this piece of infrastructure helped Georgia to avoid some of the financial difficulties which some of our neighbors had. So once again, thanks to them. I hope there will be even better regulation and better enabling environment for building and developing our credit reference agency or agencies. We also are interested in favorable credit for capital expenses in agriculture. This is a program subsidized by government to improve access to finance for agricultural businesses. So we would like to be part of it, and that has been mentioned. So that's part of the reform process. And last but not least, something which was mentioned lightly, but again, big interest from us is initiative of the government about credit guarantees and startup financing mechanisms. Something which we would love to participate and see how we can engage. So recent decrease by the president of the National Bank of Georgia included rules for MFO supervision. We had a number of ratios there. I won't go into details, but if there are questions, we can cover them. So ratios have been defined. Also, we have another rule for loan loss provision, which is providing guidance for classifying assets according to their credit risk. And there is one piece of regulation which is now under the biggest attention of an industry. It's a rule for issues of consumer loans to natural persons and the way how we should do affordability checks. I'm happy to elaborate on this during Q&A. So, critically important suggestions, and this is not new for our regulator, but let us sort of again share with investor community. First of all, probably the biggest issue is rules for loan making for consumer credit or household credit for people who cannot provide documental evidence for their income. And this is a reality. Biggest part of Georgian population cannot provide documental evidence of their income. And that's how microfinance operates. So our proposal is to apply these important norms to vulnerable customers. Don't apply them to entire market because as we know, over-indebtedness might be a problem for some pockets of the market, not the entire market. So that's why we felt we should propose the differentiated approach to this and apply PTI or LTV ratios, restriction on automated credit scoring to that particular market. And we can define it together, either people with certain credit risk grade or pensioners or people under the social allowance. And we also think that it's important to discuss possibility of rehabilitative loan products of these people. So we don't want to exclude them from financial industry. We want to treat them with the right products. And that's why I think differentiated approach would help them and will allow the rest of the healthy part of the market to carry on, under the background of this economic growth. Another issue is interest rate cap. We think that in intervening period before these goodies will be implemented, to be able to have a temporary provision and perhaps have a 65% of interest rate cap for loans until 3,500 lari. And again, as a temporary measure until the sector adjusts and we absorb these costs of regulatory transition. So this piece of legislation is in the parliament. If not government's approval last week, it will be approved. So maybe this is a good time for once again raising our voice and asking parliament to consider this. And two other things. One is a deduction of LLP expense, as mentioned previously. That would be very helpful. It requires amendment into the tax code. And the last thing, which is especially important for Crystal, but also I believe many other MFIs will find it valuable, it's a different treatment of funds raised through the rated corporate bonds. So essentially, currently, the way our regulation describes it, if you raise funds from corporate bond or from promissory note, doesn't really make any difference. But it will be helpful for us and helpful for the market participants. And I say now, corporate bond market. Some of the members of the market participate today. Here, I think that would be important that we don't limit MFOs to get rating. I think some colleagues from Fitch rating are taking part in this call as well. So as you know, already 2 companies took rating, and if they decide to go ahead with corporate bond, that would be good for everybody, I think. I won't stop on over-indebtedness. That's a difficult issue. We're not arguing that there is over-indebtedness, there is not over-indebtedness, but I think the trends are generally does not give any sort of panic grounds. It's always good to look at over-indebtedness, better sooner than later. But I would like to, express my personal view that the market is in a good shape. Some of our investors said it's Georgia is too good to be true, but I think that's very transparently here. This is credit info data. Our indebtedness is not increasing, but it's good to have it under control. This is a risk grades from A, which is the best, to the lowest possible grade. That's how market is distributed. Again, that doesn't mean the default. It just means the propensity to repay the loan. Again, this is for whole sector. And if you look at MFIs only, it's going slightly down. And again, MFIs here include also online lending companies. And online lending companies, with big respect to that sector of financial industry, is not necessarily, in my mind, a microfinance organization. That's why if we look at microfinance organizations, believe me, the figures would be even better. And I think our investors know that. Okay, on this note, I would probably thank you. And if you have any questions, happy to come back. Thank you.
Please do.
Thank you. It's really it was really nice and comprehensive presentation, which actually did the most part of my presentation, because this all the actions listed here nicely for what we have done. Maybe if there is need to explain why, I think that we well communicated to the market why we are doing all these things, but there are some areas which I really want to pay attention. The massive regulations or changes, I understand that it makes the private sector a bit nervous, but I think that this year and a half, 2 years of the sort of massive printing new regulations, once it's understood why we are doing that, create some better incentives for growth later. I will explain now what I mean by that. I don't think that we will. I think we have finished the formation of the foundation regulations for non-bank sector and banking sector as well, because it was also intensive year and a half for in terms of the banking regulation as well, because of new capital requirement for banks and liquidity and some other stuff which is related to the banking. But you're totally right. What we are building, we can say in a simple words. We want any financial intermediary in this country to be licensed and regulated. I mean, that's kind of a simple rule. Fortunately or unfortunately, we had this asymmetry: the heavily regulated banking sector and sort of non-regulated or half-regulated microfinance sector, and total mess in with some of our friends who were sort of dealing with the public money, which is totally unacceptable. So we set this simple rule. We want to, if you are an intermediator, you have to follow certain clear, transparent rules. And from January next year, any business or any company who wants to lend money should be sort of have the clear rules of the game. But it has also the other part, which is the deposit taking activity. We just made it very clear that there is no ability of taking deposits from public without the central bank license and strict regulation. That's kind of fundamentals. But going beyond it, we not only said that we want to have the sort of, whatever you can call it, fair rule of the game or whatever, but this, let's say, same rules for the lenders. But we think that with the ongoing effort of supervising the credit bureau and with the cooperation and coordination with the government authorities like Revenue Service, where we are trying to integrate the data what we have and what we will have from all lenders to credit bureau, plus data from the tax authority. And I want to emphasize on very important offer what the government made to the individual entrepreneurs or the self-employed, whatever you can call it. I mean, this whatever symbolic 1% tax for activity which is like, $500,000 per year, which refers to I don't know the percentage, but the most of the self-employed people in this country got this offer from the government, which is I think the very good momentum for government itself, for these people, and for the financial sector. Utilizing this, what I've said here, plus the government offering, combining these components together, it means the reduced risks for the financial sector. It means the increased access with the better rates, if you say, from the financial sector to these people, self-employed people. So we should look on these reforms in kind of from this angle, not just that central bank decided to just try and regulate some unregulated sector. I think this, if you look on from this perspective, we think that fairness is, of course, also you can debate on that, but we put it under the responsible lending umbrella. I mean, I don't think there is an interested party who would not agree to this principle that any lender, when he's lending money, we should also think about the Georgia's context. I mean, we all agree that it's a poor country. It's a really poor country with a very low financial literacy, and it's like, culture of consumer protection. From that side, what knows the good part of the society. So we should think about rebalancing and putting it on a more, let me put that way, more stable growth. Not like you can think like growth this year, but if it's not stable, if it's not reasonable, then we might sort of have problems in future. So that's why when we are talking, I mean, it's very popular now, the indebtedness and the issues like related to this topic. From our perspective, what we have said and what we are saying, that all these measures, like all this consumer protection or the responsible lending umbrella is, let's put it away, sort of, it's not like will help GDP growth to digit numbers, but it's a measure to avoid risk in future. Yep. That's and full stop. It's not like and there is nothing beyond that. Central bank has his own mandate and his own responsibility, and government his own. Sometimes they coincide, sometimes don't. But that's the the path the central bank is continuing his reforms. This document, there is also one thing, at least we have that feeling, maybe we are wrong, but we tried to communicate as much as we can prior to sort of adopting the important regulations. And nowadays, of course, we didn't agree on some. We had several meetings regarding the regulations. We have some different ideas on the ceilings, etc., etc. But at least for us is that market was informed what we are doing, why we are doing, what's coming, maybe with some details missing there, but at least the regulator approach was at least for me clear and visible. We should continue working on the important document which you mentioned. Again, use this responsible lending directive, let's put it that way. Yes, there are some obligations which we took towards the EU integration and harmonization, etc. But it's the area which is not done for just marking some, this and that directive. In Europe you have this mortgage directive or consumer lending directive. We think that this regulation, which is a kind of raw document, but there is a big room still to work together. We have rounds, meetings with the banks, and there will be more intensive meetings now with the microfinance sector. I think it's fair to say that there should be a kind of I cannot kind of promise because it's the working document, but the more different or slightly different approach in terms of even PTIs or the LTVs might be used towards banking, microfinance, on what we have new definition of lenders. Because of it's a 3 different groups. If you are not a deposit taker, of course, there should be different rules. We hope that we somehow reflected in our regulations for microfinance institutions this difference if you are a deposit taker or not. And we will try to have that kind of approach with this important regulation, which we think that should be adopted by end of the year. There is a parallel work I already mentioned, but it's very important to have the accurate and clean data also in the credit bureau, which is a very important instrument. And now we're taking some actions to have more data, but more accurate data for lenders to be used later on in their underwriting process. On the cap on this regulation, which is already in the parliament, saying frankly, I don't know whether there is still room for you guys to sort of you to hear from the parliament, because I think it's, if not mistaken, there was a second hearing with these regulations and civil changes in the civil code. As far as I know, the third hearing you normally cannot get some principal changes.
As far as we know, so sorry interrupting. As far as we know, the second listening was postponed.
Yeah, I'll not make any statement which might be false, but we have to check that. But still, I mean, it's we tried to make some additions to make these changes more kind of clear for everybody, and hope that the final wording, the changes will be acceptable for interested parties. On some other things in terms of the actual regulation for microfinance sectors, I'm still keeping this promise regarding the tax deduction, one thing, and the liquidity lines for microfinance institutions. It's the first time after approval of these regulations when we can say that now, still with some sort of there are provisions when these actual requirements are enforced, but it's the first time when regulator has sort of access to this power regarding the supervision and regulation of microfinance institutions. And more transparency, we get more understanding of your balance sheet, your data, we will get there. There is a direct correlation of the connecting you to the benefits of the what central bank can have in terms of the liquidity. I would call it like a cool out period. Maybe next 6 months will be crucial, because unfortunately some market participants, though we have published, we have talked a lot, we have communicated a lot in terms of the upcoming regulations, upcoming requests for the capital, etc. Unfortunately, it doesn't. I cannot name those guys, but still, sometimes we don't see this understanding. What does it mean? What does it mean to report? What does it mean to do an IFRS reporting? And there is, that not only central bank, but now SARAS is authority over getting the audited reports of the microfinance institutions, which is not an easy task, I understand. And it's not only the capital requirement of 500,000 or 1 million, but it's how you see your business and what is the value added to the financial sector. I was telling a year ago that year by year the commercial banks will become more competitive towards the microfinance. I mean, that's the natural process. So you have to think about the alternative sources because it's also their area of the activity. I mean, they entered the micro segment and they'll continue doing that. That's why we are welcoming the corporate bond market development, etc. But again, it's like when you have more confidence in your books, of course, more confident we are with the initiatives we can discuss. I mean, as you mentioned, whether inclusion of rated corporate bond can be preferably treated or not. I mean, we can talk and we can discuss on that. Actually, that's what I wanted to say here, and I'm really ready to answer any question. And thank you for this opportunity. A really nice event to recap and also plan for next period of time. Thank you.
Thank you very much.
So should we start? Would you mind if I moderate questions on the webcast and you do in the room? Yeah.
Yeah.
Okay. So I would like to ask our participants from all over the world, almost. Very nice to see you all. You can write your question in the chat section of the conference program. You can find chat, and it probably is now flashing for you. So here, I will read your questions. Yeah. In the meantime, I have a question from Dutch development bank FMO. Representative couldn't attend, Mr. Jan Willem Hoek. He made a number of questions, but I'll probably read those which haven't been answered. So he says, we understand where the ideas from MBG stem from, and we as FMO support these efforts wholeheartedly, no doubt about that. So first question was, can you share more news on the plans of supervision of the MFIs by the MBG? Is there a master plan for for it. For banks, we know that the supervision is of excellent quality. What is the compass of NBG supervision by MFO supervision by NBG? That's number one question. I will read another question, and that will be, I think it's from FMO. Is the NBG working on an implementation schedule that enables MFI to comply in a reasonable period of time to the new regulation? I think we can answer that as well. So, yeah, thank you.
Thank you. FMO is a long time partner for this country, especially for the financial sector, and they know the regulator here well. So based on this, I can assure that the quality of the supervision of MFIs will not be far from what we enjoy in the banking sector, and it's not because the staff is mostly from the banking supervision, etc. But we made a lot of effort to sit down and talk what is difference between the MFOs and the banks, and it's not like we are applying the same sort of copy-paste measures for MFIs. I also want from you, from the sector, also to hear if you feel that there is some kind of not fair or very overreaction from the supervision. But yes, I can assure that quality will be there. And the second, I think in our documents there is this feeling of some adoption periods kind of approach. I mean, for some ratios there is a time, and company by company basis, we are actually on so-called risk approach. You can apply that, and we will try to be as smooth as possible in terms of making this transition really smooth.
Thank you. I don't have questions here yet. I can't see. If anyone from webcast wants to speak, I can suggest to unmute your microphone and go ahead to speak now or later, because we can now take a question from the room.
Actually, before I want to partially to respond to your answer, and well, second part will be a question for you. So, well, if we general our response, I mean from association in general from industries, that the first part of regulations which are already in place are really positive, and we all believe and we come across on the common position that it will be really conducive, and hopefully even within a 1 year period we will receive much more sound market and sound environment. As Mr. Kigoria mentioned, we are in process of discussing the certain clauses of instructions for lending, and it is really greatly appreciated. We value that much. So, and still we have a time for that, because, well, until the year, and we believe that our recommendations will be taken. Mainly it refers to some instructions regarding the self-employed people on agricultural lending, and the differentiated approach for PTI, for microfinance sector, because well, the new initiative regarding the taxation treatment will be good stimulation for clients, but they would also need some stimulation in terms of accessing adequate loan sizes. So from that perspective, I think the PTI ratio is really crucial. And the most, most hot issue for us and main concern is the interest rate cap, as we mentioned, and you are aware. So, well, we believe that National Bank, which is the main representative of, well, actually government, they are professional and they completely understand our concerns, why we are concerned, and what is rational behind. But in some cases, well, we shall not accept that, well, in general, the parliament is staffed with such a professional people. So, as we know, still there is a second listening planned. So my question is, shall we expect that the National Bank provides some recommendations which can strengthen our arguments for making some exception for microfinance industry, at least for a period until we will get some benefits like the deduction of provisioning expenses and access to lari.
Thank you. Frankly, on the actual cap, I mean, whether it's 50 or 65 or etc. I mean, I'm not sure that the government has very sort of firm position there, and we don't think that whether it will be 50 or 60 is much kind of big deal, unless, as you rightly mentioned, we have time to adapt to the new realities and so look on the details. So on actual cap, I'm not sure, but in terms of the adoption of the actual when it comes to, I think there is a room to have kind of time to adapt to these new realities. That's what can I say at this stage.
So questions in the room?
Please.
I'm so impressed with the attention. Any questions from our lenders who are bombarding us with questions when we're one-on-one? Anheshi is excellent.
Hello, this is Florida Finance.
Sorry, microphone.
Oh, thank you. Hello?
Yeah.
Hello? Yeah. So this is Blorchard Finance. My first question goes to NBG representative, Mr. Murtaski Korya. So we would like to know which countries or regions served as a benchmark for drafting those regulations, and especially in part of the imposing the capital adequacy limitations and cap on the interest rates. And then the second question is why now? Why these regulations are taking place right now? And whether this is a part of some kind of more broader event, like some kind of extended facility from IMF or any other international financial institution. Because we usually see such drastic changes in economies which want to usually borrow or gain some endorsement for larger international companies. Thank you.
Thank you for very interesting question. I mentioned this responsible lending umbrella. I mean, for this, if you look on whole European countries, I mean, there are no questions. I mean, a week ago we had we are part of the regional Basel committee, and we had 20 countries representatives here, and one of the topic was the indebtedness and all these issues. And just if you don't look on the consumer lending directive or the mortgage directive or any other, in most countries there are, I mean, there were like 4 or 5 countries where in very high level laws the lending is kept to the salary. I mean, it's nothing kind of new what you see in these things. Regarding the actual caps, all this started when this kind of fintech, let's call them in this regard, companies started all these payday lendings. In most jurisdictions, because of their legal structure, like in Europe, you have the credit institution and everybody falls under the sort of credit institution kind of definition, and the rules of the game are very clear there. Yeah. In some regulations, these guys were out of the scope, so that's why they saying in England, as an example, I can give you England's example. They started with this cap for the payday loans. And if you look on the last 4 or 5 years, in most European countries, the regulators try to put this cap, and there is a range from 40 to 100%. I think we provided in the parliament all these ranges by countries. So 50% is like in the mid area. But actually, we are looking on the European countries. As for the questions, why now and what is, I already mentioned that there is nothing special arrangement for the changes. I mean, whether it's linked to, I don't know, later on it was linked to the politics, and I mean, it's politics, but without IMF or EU harmonization or whatever, I mean, we had a case when lending, thanks to some predatory lending schemes, thanks to some unregulated institutions, started creating systemic risk for a sector. I mean, if you look on some credit bureau data, you have unfortunately a huge number of citizens of this country who are entering with dangerous level of indebtedness, and you see the tens of thousands of people who are banked by 4 or 5 different institutions. So I mean, it was a start of some bigger issue and bigger problem. That's why we always say it's not just right now. It's not that big. I mean, that indebtedness is like a huge issue. It applies to some low-income, high PTI sort of segment of this population, but plus to that, you should look on the loan to GDP ratio of the country. I mean, like 5-10 years ago, I personally was running to investors saying that like its penetration is very low. It's how growth environment. Still, there is high growth environment for to grow. I mean, that's the message for the investor that yes, Georgia still is enjoying the high growth probability, but our concern is that segment of the population. So that's why we think that the responsible lending framework the most suits the hedges from these risks from one side, but on the other hand, it gives the growth possibility for those people who have enough income. And we always say that there is a growth possibility. I mean, if country grows like with this rate plus deflator, I mean, you normally have like 10 to 15% growth there. But this growth should be stable. So that's a kind of our message. And we started when we started. I mean, it's some might say that late or too early, etc. But we reacted when we saw the signs of some potential systemic risk in future. Thank you.
Yeah. Maybe before we ask another question, and we're getting probably to the closure, maybe in 5-7 minutes. There was no question, it's just one comment. Actually, FMO question was shared by many. There was a recommendation from our US lender to, essentially the idea is it would be helpful to, in such situations, to have a schedule of implementation for changes. and it ideally is public so that everyone can follow it and know when what is coming. I mean, that is probably a very fair one. I think there was an element of, of that, but I guess to make it public also for investors, we can think of some other arrangements. Now, we have a question from Foundation Grameen Credit Agricole. Hi, is the cap on the interest rate only or on the effective interest rate, and so includes all fees? And another question is, what is the current benchmark of the Georgian MFIs? So would you?
Yeah, it includes all the fees. It's what we call the effective rate, including all the associated fees there. Currently, we have 100, and it's planned to reduce it to 50.
Mm-hmm. Excellent. Another question from Belgium, from Microfinance. Thank you very much for this initiative. Highly appreciated. I have two questions from my side, Mr. Kikoria, related also to FMO question about the reasonable timing to adjust. Mr. Kikoria mentioned that individual risk-based approach will be applied to MFIs. Would it be possible to give some more details on this? Will MFIs receive kind of official waivers from NBG for certain covenants or for certain periods, or is this will be rather in the form of informal talks and agreements? Second question, what kind of sanctions would NBG apply in case of non-compliance and absence of waivers, financial fees and penalties, and any possibility of even revoking the license? So these are questions from Belgium.
Well, thank you for questions. There is no way that companies not complying with the regulations. I mean, it's very, very clear that everybody will be has to comply with the regulations. By risk approach, I only mean that, and second thing, we will bring as much transparency as possible, and I don't like to using always referring to the banking sector, but if you look on the transparency level that we have in the banking sector, especially from the Pillar 3 transparency perspective, when it's everything is declared there, and from next year, even the capital buffers will be the range of the additional capital requirements will be accessible for others. So we want to apply the same standard of transparency here. There is nothing informal. There is no way that someone will try to avoid not meeting the requirements. But with risk-based approach, I mean, I gave the example of rated corporate bonds or things like that. And there is also one thing. We just started. We might, I don't know, maybe we did some mistake in these regulations. Maybe we need some period of understanding of all this. There is clear intention to make system transparent. We really believe that this transparency and the clear rules of the game brings more investments. And as I already mentioned, that there is a room for growth. There is a growth potential in this country. So if you combine these things, I think there is the sort of roadmap for investors to react. Thank you.
Great. Okay. I'll make also in Georgian.
You can ask questions in Georgian as well, because there is a translation as you hear that.
I'm Nia from EBRD. I have a question to Mr. Kikoria. So at the moment in our MFI market, we have around 75 licensed organizations. What do you think and what do the regulator and DG expect to see in like 1 year's time after all these changes are implemented and the time will lapse? Like how MFI sector, license sector will adjust to these changes? What do you think will happen? And like in 3 years' time, what will be the competitiveness of MFI sector towards the banks? Because as you mentioned, banks are playing hard in the micro segment. So what do you expect?
Thank you, Nia. Very, very interesting questions. The reaction of the sector totally up to the players, how they position themselves in this environment. In this environment, I think it might just. I cannot say any sort of theories what will happen, but what really they need to do is that make a clear play between one, deposit taking, because it's very clear kind of sort of line for regulator whether are you deposit taker or not. That's one important question. So someone should think very carefully. Want they to play with take the public money or not, because it's a very critical business decision. That means want they to stay as a microfinance institution or we have new definition like lender. Working with your own capital. So that's, I think out of the 75 they need to make this decision. What are the benefits of being microfinance institution? What are the benefits of dealing with the public money? That's very, very clear thing to them to decide. Of course, I have some suggestions because of knowing this data, but it's really they have to make the decision. Second, very, very important and very good question regarding the competition with banking sector or some non microfinance institution players. What we are building here is that eliminating financial data asymmetry access out that. What we are building a system where every lender, banks, microfinance institutions, and these lenders will have access more or less to same data about the private individuals' debt and income. So access to information will be more or less the same. What will make a play is the efficiency. With these new technologies, with the, some know-hows or how creative the lender will be. Of course, capital is always kind of capital and it's there, but I think the play will be in effectiveness. It's like 21st century, and with all this traveling to Mars and stuff like that, the winners will be the guys who will think wide, who will think more on new technologies, big data analysis, and stuff like that. So that's, hope I answered the question, but that's what I have in mind.
Can I, on this note, also mention that one thing which I forgot to put in the presentation is that while barriers to entry to the microfinance sector became more difficult, I think one should give a thought to new innovative entrants because of a lot of innovation taking place. It's very difficult now to apply for microfinance license without serious capital. So many countries have this so-called regulatory sandbox approach. So maybe later down the line, it might be a good idea to have the same type of regime for innovative, small, young entities. And I think that's, and we might fly, who knows? We will probably see some of the good developments in Georgia. Okay, Beso, I think we are getting to the end. According to our agenda, we can sort of make a sort of round it up. Can I, from my end, thank Vice Governor very much for your time. I know how busy you were, and on a very short notice, happily agreed to answer investors' questions. Thanks to everybody who are here. Thanks for everybody who got online, and hopefully you had a good quality hearing and vision. And especially thank you for questions. I think they were very good questions, gave us a flavor of what investors think. And I think if you don't mind, we can, try to do these things in the future, maybe on a regular basis, once or twice a year at least. So Beso, please, would you like to maybe close?
Yes,
thank you.
I think so. Thank you very much.
Thank
you.
Aluba.